I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show, Mike.
Oh, it's great to talk with you. It's a wild day, that's for sure, in the financial markets. It's pretty amazing.
Well, we're seeing government by tweet. President-elect Trump is making decisions even though he hasn't been sworn in yet. The latest impact, the pharmaceutical industry, where he said he's going to crack down on needless price hikes. We just have to think back to the EpiPen that went from $100 to $600. And the thing is, you may not even use it.
Yeah, it is pretty funny. And on that news, of course, today, the biotech sector, it took it on the chin this morning, and it's still down, and in fact, for the day. But, you know, the thing about the biotechs, though, is the day Trump got elected, or the next day, they gapped up tremendously, and they went up for a day or two, but they've been weak ever since that top, and they haven't participated in this rally that's been going on in the stock market. Before the election, I was following people that were saying that if Clinton wins, biotech will fall because she's mean at drug companies and talks tough, and they were suggesting that Trump would be a friend, and in reality it didn't make any difference. But I think the real story of biotechs is it's really a sector full of hot air. Yes, there's giant drug companies like Pfizer and on, but the sector itself, the stocks in biotech, are dominated by these companies that make no money, they have no earnings, and they were red-hot stocks in 2014, but since then, they've been really the worst things to own, period, in the stock market for the past couple of years, and they've been really the worst sector this year, too. So I just think they're junk and toxic and not to mess with, and, you know, it doesn't seem like you get good news either when it comes to them from the president. And the thing about Trump is he's tough on businesses. He ran as a populist. And that's how he's going to behave, and he's going to do what is going to get him the most votes.
Well, he's not alone in being against unreasonable price hikes for pharmaceuticals. Pfizer in the UK was just fined $107 million for unreasonable price hikes.
Yeah, and in the United States, they really gouge people, maybe even worse than that. The whole healthcare industry is probably almost as unpopular as Congress. So don't expect Trump to try to win people's votes by being friends with them. It's kind of a hopeless case. So I don't like those stocks. I've actually shorted them at times. I'm not short now, but it's so much going on. There's so much other things going up in the stock market that it doesn't make much sense to me to try to, you know, hope those are going to somehow turn around.
What's happening with gold right now?
Well, you know, gold topped out in July, August, after having a tremendous run. The mining stocks went up like 100% from February to that summer peak. And then there's a fairly quick correction, or a substantial correction. Gold fell below $1,200 an ounce a couple of weeks ago. And one of the things that happened is Trump's election wasn't a help to gold, because it turns out that if you look at the details of his economic advisory policy team and the things they say they want to do, they say that zero rates doesn't help the economy and that we need to get off that, and that higher rates a little bit at least would spur growth and investment. And they think quantitative easing even is a failure, even though CNBC says it's the greatest thing in the world. the Trump people say doesn't create real economic growth. And I think they're absolutely correct on that. So that's a total, abandonment that's going to happen of the type of policies we've seen from the Federal Reserve over the past 15 years at least. And that made the bond market go down pretty quickly, causing interest rates to go up. So I think that caused some short-term turbulence and additional turbulence in the gold market. However, I got to say, at this point, I think the gold stocks are very compelling buys. One of the things that's happening is for the past month, the gold stocks have held up while gold has gone lower. And that's what you tend to get when you see a big bottom in place and a great buy opportunity. So if you look at the mining stocks across the board, they've got bases being built over the past couple of weeks, and when gold fell below $1,200 an ounce, they kind of ignored that drop, and just this week gold fell to about $1,165, and they barely fell at all, and they're at the top of that range right now. So if we can get a breakout of that range, then I think they're going to go up in the bottoms in and just enjoy the next ride, which is could last for weeks or even months, back up to the highs maybe even, and that's a great run to be a part of. So I think we're at a potential turning point with the gold markets.
And of course, too, you always have to look at how profitable a gold company is when it comes to production costs. I remember not that long ago when they said $1,100 an ounce would be their bare minimum to break even. Now a lot of companies have it down to $900, $800.
Yeah, that's exactly right, and that's a big reason why the stocks didn't crash when gold fell below $1,200 an ounce a year ago. When that happened, they crashed. It was a total meltdown, and they fell so much that they were being priced as if they could potentially go bankrupt, a lot of them. And many of the junior mining stocks, the small cap exploration stocks, they fell into oblivion a year ago, and there's a decline there towards the end of that bear market. So this time when gold fell, that didn't really happen to the exploration small cap stocks. They pretty much held up. Yeah, sure, some here and there fell, but for the most part, they've held in there fairly well. There's been no crash there at all. And even with the mining stocks themselves, the big cap miners, they haven't, fallen anywhere like they would have in the past during that last bear market. And I think what that is a sign of is that during that last bear market, people were actually afraid that many of the companies were going to go bankrupt, that when people saw gold go below 1,200 and then temporarily below 1,100, they're like, oh my God, it's going to go to 800 or 700, and there are people saying that and scaring people up. And this time's totally different. We had a pretty good pullback in gold here. Maybe it's not the bottom, but it's been a pullback regardless. But the mining stocks really haven't fallen in some sort of mass panic or anything like that. And I think that means people are not afraid that they're going to go bankrupt. They're not afraid gold's going to 900 or some silly level. And that means that there is value in buying the stocks here, and they're going to make money. And I think it's worth being a part of that.
Well, many people, too, are still expecting a major correction in the new year, and that would be a time when gold would go up, wouldn't it?
Well, there's so many cross currents around the world that could help gold go up, and I gotta say that, like, with the stock market at this point, I don't know when it's going up so much today as we're speaking. The Dow's up about 250 points, and there's, like, if you look at the financial stocks, consumer stocks, transportation stocks, they're since Trump got elected, they've been going straight up like crazy, and today they're up even more. And it's hard to think that, these stocks are the new leadership now, the stock market, the Facebooks and Amazons and Googles and all these past fads, and biotech even, throw that in there. Those things aren't really doing much. Last I looked, I think Facebook was even down today with all the buying going on in the stock market. So there's new leadership, new sectors going up, and that's where the money to be made is in the stock market. And it's going up so much that it's hard for me to think it's going to have a substantial correction until it takes a couple weeks at least to form some sort of top. So I can't really forecast a huge drop, to come in January or something. I do think there will be one next year. I mean, there probably will be a 10, 15, maybe even 20% correction. But I don't, I can't tell you when until, there's more weakness in the charts and some things have to play out to lead into one. But with gold, the good news about that is it doesn't necessarily take the stock market in the United States to have a huge decline to make gold go up at this point, because now there's stuff going on all over the world that could potentially put a bid on gold. The two big places where there's trouble is Japan. The Japanese are having problems because the U.S. dollar is going up as a result of Trump's win and the potential change in monetary policy. That's making problems in debt markets around the world start, it appears. Interest rates started to go up in government bonds all over the world, and the Japanese don't want that. And a couple of weeks ago, the Japanese prime minister said that they'll print any amount of money needed to keep their interest rates at zero. Well, that's a sign of really craziness and economic trouble that could blow up and cause a huge disaster. So that would be one reason for people to buy gold. Another reason is, of course, Europe, which is more in the news. We just had this Italian referendum. Everyone's ignoring that right now, and there's sort of like a focus as we're speaking on the European Central Bank that they're going to extend their quantitative easing money printing bond buying operation, and people are at the moment thinking about that, how that can help the stock market and make it go up. But the reality of populism and the anger people are feeling about how these policies, yes, they help the financial markets. Yes, they may help me and the listener make money by getting involved in gold, getting involved in stocks at the right time, and betting against them at the right time and playing the markets. It helps people who are playing the markets. There's no doubt about that, but it does not create real economic growth. And countries are being wrecked. Greece has been destroyed, and it's just not good for the regular person, and that's not going to end in Europe and Japan. And people, are excited about the market today, but the populist movements aren't going away, and if it continues, you don't know what will happen. I mean, some countries may leave the euro and so forth, and the euro may fall in value, and just like the yen could fall in value, and the Japanese prime minister says he'll print any amount necessary, the euro can fall in value because of the rise of populism and discontent, and that's another reason that gold can go up. So, there's lots of reasons gold can go up, and I can't really predict which one will happen first. Will the stock market fall first? Will Japan blow up first? Or will some country in Europe say, I've had enough, and we're getting out of this euro system that's destroying us? Any one of these things can happen, and it's interesting times we're living in.
We'll have more with Mike Swanson right after the break.
Gem International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. Gem International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Mike Swanson. Mike, the Indian government is now raiding the homes of people looking for what they call excessive gold jewelry. Does that put kind of a crimp on people who want to keep gold around?
Oh, I don't know. I think people are resourceful, and if they got to, they'll get some jugs and bury it in their backyard and put the gold in there. It may make people think they need to do the opposite. If the government's telling me I shouldn't own gold, that's going to make me think I better get as much as I can. Something must really be wrong. So we'll see. We'll see how well they can crack down on that. There's always the bribe, too. They can bribe the policemen or the authorities or whoever who are supposedly looking for this gold.
Right. In a country where people wear their wealth around their neck, literally. I mean, you hear stories that you can walk safely down the street there wearing $1 million worth of gold because of the tradition. The neighbors just wouldn't allow you to go and rob somebody.
Yeah, well, that's when you have real neighbors and a society that everyone knows each other. And it's not just people talking on the Facebook or something.
What about people in North America who own gold? Should they be worried that the government's going to go start raiding gold vaults?
No, I really don't think that's going to happen. I mean, there's stories that in the Great Depression, FDR issued an order and told people they had to bring their gold in, but I don't know if anyone's actually really ever studied how many people even turned it in. I mean, there's no stories of people actually going to jail for it. So, and another thing too, it's so much a part of the financial markets nowadays. I mean, you can trade gold on the exchanges. There's exchange traded funds, and the government's not going to stop that. So, I don't really think there's much they can do. And frankly, in the United States, one thing about the Trump administration is, they have these plans, or they want to cut taxes and increase spending by $1 trillion or more, and do all these things to try to stimulate the economy. And the implications are deficits are going to grow, and the government debt's going to grow, and logically you would think, well, that could be a total disaster. But the way out of that is what I think we're going to see in the next couple of years is actions by the Trump administration to make the dollar go up in value, and to get companies to bring dollars back into the United States, and to force people to buy bonds, treasury bonds, to keep rates under their control. They're going to use real government action and stuff to do things. This is not like some libertarian president coming in there. He's going to use the powers of the office he's got to try to make things go the way he wants them to go. And we're going to see if it all works out or not. But to give you one example how this, one way he could do this is he's got, the head of the Minnesota Federal Reserve Branch was on CNBC after he was elected, and he said that the banks in the United States are shaky and they could cause another crisis, and the way to solve that would be to force them to double the amount of treasury bonds they've got to buy so they have bigger reserves. So right there is a way that Trump can force banks to buy government debt. So there's going to be all kinds of things going on over the next couple of years that we've only can imagine. But so the point of me saying all this is that I don't think the government really cares about whether people buy gold or own gold. What they really care about is making the dollar a better currency than the currencies of the rest of the world, and they're not really, going to have much trouble doing that. These currencies are in much worse shape. There's much worse troubles in Japan and Europe and China, and these currencies are already in downtrends. So it could be a race to the bottom where the Trump administration just maintains the dollar strength by making the dollar fall less against the other currencies. And I think that's their main objective. And the price of gold, I don't think really matters in that case. It's just making sure the dollar does better than other global currencies.
Well, I know in Canada there's new talk about perhaps Canada adopting the U.S. dollar because people are tired of seeing a 75-cent or less dollar, and especially in the wintertime when a head of cauliflower costs you $8.
Yeah, that's crazy. Well, that would be pretty amazing. I mean, it's weird because I remember like 10 years ago, the Canadian dollar and the U.S. dollar used to, it seemed like they were trading about parity, about even.
Yeah, and for a short while, the Canadian dollar was at $1.10.
Yeah, it was higher. Well, could the Canadian dollar benefit from the oil prices have gone up lately in the past couple of weeks?
And
maybe that'll help.
Yeah, well, it helped a little bit, but because we have to buy our oil in U.S. dollars, the price at the pump doesn't go down, it goes up.
Oh, jeez, okay, I see.
Yeah, so we get a double whammy that way. Mike,
Yeah, goodness.
thank you so much for chatting with us.
Oh, thank you. It's great talk as always.
My guest has been Mike Swanson, editor of WallStreetWindow.com. You're listening to HowStreet.com Radio. Find us on Twitter at TalkDigitalNet. On YouTube, we're Talk Digital Network. Questions can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com Radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com Radio is a production of HowStreet Media Incorporated.